Hello traders out there in trader land, D7 here with Grok Trade, and I've been on the couch all day, feeling a little under the weather. Alright, sorry to say, give me a couple days to get to this after last week's video talking about the big warning saying that markets could be in significant trouble. And I just want to share with you guys, we're going to start with a line chart. We're going to only look at line charts here. We're only going to look at the weekly charts. Okay, weekly charts is what we're looking at. Only line charts is what we're looking at. And this is what I'm getting ready to share will shock many of you. And I'll start off by saying it, just like I did last week. There's a decent chance out there that high right here on the spider S&P 500 ETF, that high, which puts us around, what's that time? That time is, you know what? I need to raise this up a little bit. Should have done that earlier. So that would be December 27th that week. That could be our market high for some time. Now, who would have the guts to say that? Someone that's not really smart, because no one knows what the markets are going to do. From day to day, markets will do whatever they want to. It doesn't matter that next month I'll have 24 years of trading experience in the markets using advanced technical analysis. Doesn't matter. I have over 2 decades of that. Almost 2.5 decades, right? Experience. I don't know. Excuse me. I don't know what's going to happen next. Well, I can tell you this. If I was a betting man, I would say we have a decent chance of that high right there on the spider being the high for some time. But we got to look at the diamonds. The diamonds, smart money moves into that when the markets are topping out, and people are fleeing more risky things. They go into the Dow 30. Let's take a look at this, see what's going on. We have higher swing highs, higher swing lows. We continue in an uptrend. However, the last 2 major swings makes a double top. That double top's only problematic if it breaks this line coming up. Well, actually, we have 2 lines that I'm looking at that comes up. If you guys don't know how to draw trend lines at the level that we're doing it, we do them. We're very, very specific. We have 3 different type of trend lines that we draw. I only show you one on my videos. But if it breaks either of those 2, just look at the 20-day moving average, 20-day or 20-week moving average. If the Dow goes below that, you know you're in a lot of trouble because we have broken the support levels. The only other support level I'd be looking at would be right here, this 349 area. And so just a big area. I'm not going to edit this out. I just don't have the energy to edit. If you notice, I just do one takes. I don't edit my videos. So just a little under the weather. You know how it goes. You guys been with me forever. I don't know. Let us know how long you've been with me. You guys do that from time to time. I appreciate it when you do. But if you've been with me for any amount of time at all, you know that sometimes I drone on and on like I'm doing right now. Get to it, Des, right? That's my real name, Des. D7 is what I go by on the intraweb. And the other thing is, lost my train of thought. All right, let's just keep going. Markets here, big symmetrical triangle above the moving averages, above these support lines, but we have a double top, M for murder, M for murder. Okay, so that's what we have there. If you also look at the spikes of volume, the big spikes of volume are red like blood. Okay, bad news. If I go here to the NASDAQ, so what's cool about the NASDAQ and the small caps is they tend to be the ones that people deem more risky. So at the bottoms of the market, people will flood into those first. At the tops of markets, people get out of those first, okay? So let's see what's happening on the Qs. We go to the Qs. Oh no, we broke 2 major support lines. We are down below the 20-week moving average. That's no good. We had the spikes here of bad volume. You get one big spike of decent volume. I'm going to go to a candlestick, just take a look. Do you see this big, it looks like nice bullish volume? The problem is most of that volume happened on an upper shadow. This was only barely in bullish territory from the previous day or week here. Okay, do you guys see that? Most of this candle, take the top and the bottom, that trading range, most of this body or most of this trading range is more bearish than it is bullish. So going back to the line chart. So NASDAQ, that's no good. People are getting out. That's what happens market top. So I think there's a good chance that November 15th, that week right there, was our market top, guys, on a line chart. That was it for some time. I didn't do that on the diamonds. Should go back to diamonds and say, what do you think my market top will be? Be those two. I think there's a good chance. That's only if we do break these trend lines here. If we break those trend lines, then count that the market top for a while. It could be a long time. Sorry for the coughing, man. How unprofessional. Nobody that has any professionalism at all should be on doing a video and leaving his or her coughs just out there blatant like I'm doing right now. But now the Russell's 2000, the riskiest of them all, thus saith the investment advisors. The small caps stuff. Let's take a look. What are you guys doing? Oh no, a massive crash and burn. They've been crashing and burning since the beginning of November. Crash and burn. We break down this support level and this support level. See that? And we smash this trend line, that support level. We come up that area axis resistance. We drop again. Comes up axis resistance. We drop again. Bad news. So Russell's 2000, the risky stocks, people got out of in November right at the beginning. And then they started getting out of tech stocks. You know, it started really getting bad at, the end of December. And the diamonds, they're going to be a little, smart money's up here right now. Smart money will start getting out of this soon enough. And then the spiders, already, guys, the big one already broke one of the two trend lines. It broke it. See it? Broke it right there. Now it has this one to break. If it breaks that one, it's off to the 20-week moving average, and that's our top right there. That's our top, December 27th. Now, the other thing I look at is financials. Now the financials, guys, have made a new high. See that? How'd that happen? The magic of the Fed pumping money into the markets. That's what that is. Now, the problem is we have a big rising wedge. Rising wedges are, it's like a plateau. You're walking the plank. I'm here in Florida, and we have something called Gasparilla. I didn't know what it was. Last Saturday of every January, it's a big pirate parade event here. It's to the likes of a Mardi Gras, but in this area. They throw beads even, crazy. And all my maternal side's Cajun. My grandmother speaks fluent French. We're as Cajun as you can get, brother. So, anyway, rising wedge. Rising wedge, we have a bearish divergence. See the red line here, the MACD here, bearish divergence. And we are at a major area right there. We're right here at it on the RSI major divergence. So we have bearish divergences here. And here's the problem. I don't know. It looks like it's ticking down there. But if it does, that means our trajectory is getting more bearish. That line may or may not hold true. It depends. Let's see what happens coming in soon. So the financials are at a major area of resistance in a rising wedge, which is bearish with bearish divergences, which confirms that rising wedge. So this is very, very, very much a bearish trend reversal pattern that's taking place here. So might as well look at gold. Gold's at major support in an apex of a symmetrical triangle. This could be major, major, major bullish or very bearish. You got to wait for the breakout or the breakdown. Watch for that. Silver is down here giving us a W. W for winner, W for wow, W for wonderful. So this could be a double bottom. This could be ready to rally higher. US dollar came up. Here's our rising wedge. You see it? Rising wedge. And we broke down. We broke down. So that's no good on the US dollar. Bad news. VIX. went up, 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 down, down, down. Guys, that spike that we got at the end of November, I think was kind of saying, was a warning sign. That was the arrow over the bow that bad things could be ready to come. And this is like the just whatever, the shock before the earthquake. So if this thing starts to go higher, like if we get up to 25, 30, 35 guys in the VIX, just know that could be setting in the top and really, really quickly. Really quickly. Bitcoin for you guys, it's in a buy territory, but the problem is it's below a major area of support on this trend line. We need to get above that trend line before I'm interested in buying more Bitcoin. Ethereum, though, down near a support level and very oversold, and looking for a buy opportunity there, which I might have, and I do have a bunch of that. So sorry for the short video, guys. Man. So I have some strong natural antibodies. So, all the symptoms say probably Omicron. And it's just a day on the couch, no biggie. But I'm one of the fortunate ones. It helps having those antibodies working hard for you. So anyway, all the best to you guys. Looking forward to next week. Let's go out there and trade, make some money, and trade smart. And Mark, and for all the students that are in the class this weekend, kudos. I'll see if I can pop in maybe tomorrow to say hi. Sorry, I've been a little MIA, but I hear it's a great class going on. So anyway, guys, take care. We'll catch you later. Bye.